All right, so let's break it down, For our listeners who maybe haven't spent as much time thinking about factor investing, what is that? Like, what are we talking about when we say factor-based investing?
So factor-based investing is basically about targeting specific characteristics of stocks.
Okay,
These characteristics are called factors.
got it.
And these factors have historically shown a tendency to deliver higher returns.
Okay, so give us an example. Like, what would be a factor?
So for instance, you could have value stocks that look cheap,
Right.
or momentum stocks, so stocks that are on an upward trend.
I see. Okay, so it's like you're tilting your portfolio towards companies that exhibit specific traits or characteristics that have historically done well.
Exactly.
Okay, and so how does this whole Magnificent Seven mega cap dominance thing, how does that play into this?
Well, so the paper really focuses on two main strategic responses to this dominance within factor investing.
Okay.
And the first one we need to understand is the use of smart beta indices. So the idea behind smart beta is basically to create an index that isolates and captures a specific factor premium.
Okay, so you're basically saying, okay, let's create an index that just focuses on value stocks or just focuses on momentum stocks.
Precisely. So you could have a smart beta index designed to overweight value stocks, another one for high momentum stocks, and one focused on low volatility stocks.
Okay, but here's the thing that I'm thinking about, right? If these mega cap tech companies are so huge, even if you're trying to target a specific factor, like, wouldn't those indices still end up holding a big chunk of these companies just because they're such a big part of the market?
That's exactly right. Because a lot of these smart beta indices still rely on market capitalization for weighting.
Uh-huh.
So even if you're trying to overweight, high quality companies, you could still find yourself heavily invested in the largest quality names, which often are among the Magnificent Seven. And similarly, a minimum volatility index might identify these large, stable tech firms as low risk
Right.
and therefore allocate a large weight to them.